This video is the exclusive content of BankingPrep to walk viewers through the most basic understanding of investment banking and investment banking careers. Ever heard of those big and prestigious names like Goldman Sachs, J.P.Morgan, Morgan Stanley, Merrill Lynch? If you want to get into the industry, of course you have. They're all big names in investment banking world. Let's take a step deeper to see what do they do. Hereunder are four main areas of all investment banking activities. Trading and brokerage. This service can be easily understood as the bank gambles its money in order to make more money. It occurs when investment banks aim to make excess profit by trading stocks, derivatives, bonds, commodities and other financial instruments in its own account, using its own money, or it can trade as a broker on behalf of a client. Salespeople are responsible for building the bridge between clients of the firm and its trading staff, and the job of the traders is to bring buyers and sellers together so the transaction can occur. The bank will employ a team of traders, best to be the best gamblers, to bet on currencies, commodities, bonds, etc. Capital markets. Investment banks offer this service to companies who are about to go public. If the company wants to raise equity, we talk about ECM, equity capital markets, and if they want to raise debt, we talk about DCM, debt capital markets. The investment banker's role in this service is to provide guidance as to when is the right time to go public, how the company can position itself to attract investors' interests, how to deal with investors, and what is the price for the share that the company sells. Merger and acquisition, M&A advisory. This is the most requested service in investment banking, where the investment banks act as the advisory role, assisting in the structuring and negotiation of a merger, acquisition between companies. The banks make a decent fee out of advising those companies. Bankers advise on both sides of the M&A transactions, representing either the buy side or the sell side of the deal. The overall 10 steps of an M&A process. 1. Acquisition strategy. 2. Acquisition criteria. 3. Searching for target. 4. Acquisition planning. 5. Valuing and evaluating. 6. Negotiation. 7. Due diligence. 8. Purchase and sales contract. 9. Financing. 10. Implementation. Asset management. This investment banking service includes activities like managing clients' investments and providing them with the strategies and expertise, allowing clients to achieve their goals and secure their financial future. So, before talking about salary or compensation, let's first take an honest view into a day of an investment banking analyst. 9 a.m. to 12 p.m. Arrive at the office, update a status report on potential buyers in an M&A deal, send it out, and join an update call with the client's management team. The senior bankers do most of the talking, so you work on a pitch book for a different potential deal in the background. 12 p.m. to 3 p.m. You join a few due diligence calls for another deal, where the potential buyer asks customers of the seller questions about why they use its products and services. You're just there to monitor the calls and make sure the potential buyer doesn't go too far with its questioning. After that, you run to Starbucks with a few analysts for a quick break. 3 p.m. to 5 p.m. There's a huge incident as a traveling managing director requests briefing materials for an upcoming pitch ASAP, and you have to scramble around to find and send hundreds of pages of reading. 5 p.m. to 7 p.m. Your associate comes over to review the confidential information memorandum (CIM) for the client from this morning, and you start making changes to the financial summary and market sections. There's a bit of downtime after this, so you order food and then shop for furniture online. 7 p.m. to 10 p.m. As one of the VPs leaving the office, he decides that the team needs to redo a pitch book for an upcoming initial public offering, IPO, and he wants to see the new draft by tomorrow morning. You start coordinating with the equity capital markets team to get market updates and case studies. 10 p.m. to 1 a.m. The associate signs off on the new qualitative slides in this draft of the pitch book, and he leaves the office. You continue to tweak the valuation in Excel-based parts. 1 a.m. to 2 a.m. Another analyst at the office is having a major problem with a complicated Excel model not working, so you decide to stay another hour to help out, and then you go home. The schedule is humble, which means there are even some parts of the job that are not listed here. So why do so many people are drawn to this career path? Base salaries at large banks in the US are just under $100,000. Bonuses are often half to 1 time your base salary, so the average total compensation might be between $150,000 and $200,000. Easy access to other great exit opportunities. Not to mention other benefits, these 3 reasons are enough to make investment banking a dream job to anybody. But it's not easy to get into the field. Only 1% of people can pass the investment banking interview. It's not about pure luck. It's about blood, sweat and tear for a long process with tons of effort put into networking and interview preparation. It's the road of those 1% of people who ace the prestigious job of investment banking. Just take the real and practical advice and guidance of those who made it. All in BankingPrep's comprehensive guides on investment banking interview and networking.